Alright, let's cover Hudson Pacific Properties. This is a small cap stock. They have properties mainly on the west coast and some in Vancouver as well. This stock was commented on in the comment section on late December here, around $3 at the time, and since then not much has happened. We have had one negative event that we will look at that could potentially impact the stock, but all in all I have quite a positive opinion regarding this company. Hey, I'm Andreas. I've been investing for over 10 years. In today's video, let's take a closer look at some of the financial numbers of HPP and one event that has been keeping a lid on stock price. With that being said, this company has had some rough times in the stock market, just like a lot of other companies in the property sector. They've been heavily punished, and I believe that one of the biggest opportunities going forward will be to buy up the discounted property companies, because it's not going to be a bear market forever. It's going to come a time when these stocks turn around as a group, and we as investors who held confidence, bought in at these lows, are gonna be rewarded regarding this. Mark my words. Alright, so Hudson Pacific Properties here. If we take a look at the cash flow statement here, we can see that they are making money from operations. So the operational side of things is going okay. And we like to look at NFFO, the normalized funds from operations. I did some research here and I saw that last quarter it was 10 cents a share, so a little bit down from the expectations of 11 cents a share and quite a lot down from the same quarter last year. So it's in a negative trend right now. Alright, so we see profits here from operating cash flow. But what about investing cash flow? Well, in this case, it's a bit all around here. They're doing some investment, they're selling off some investment. So negative here, they're investing, positive, they're divesting. And what about financing? Well, financing, they tend to do some loans as well, pay back on loans. And we can see that in terms of issuance of debt, yes indeed, they have been taking on new debt, but also they have been repaying large amounts here. So what does this do to the balance sheet? How leveraged is this company? You can see total assets here. Switch to quarterly. We can see total assets and total liabilities. It's around the normal number of 1/3 in assets and 2/3 in liabilities. So it's around the average leverage ratio here for property companies. In terms of the strength of the balance sheet, it's not super strong, but they're not diluting a lot of shares, so they're clearly handling financing. They don't have to do any emergency option here. This is a company, it's a very difficult one. I think that they have the potential to outperform, but they also have some risk here with these assets being concentrated on the west coast. For example, here we can see that they made a comment regarding Los Angeles is a city of unmatched innovation, creativity, and resilience here. And our employees are safe and our assets are unharmed. This is with regards to the wildfires. But the losses suffered by our colleagues, friends, neighbors, and the broader community are staggering, and our hearts with them all. We honor our first responders and are supporting in every possible way to ensure we build back our city back even stronger than before. So even though there might not have been direct property damage as a result of the wildfire, the whole area is affected. Things like insurance on property is going to be affected, the infrastructure around there, And what about the companies operating in the area? Perhaps we see that, all right, they might have some stage for a music venue, and who's gonna want to go to a music venue in a burnt down town where, you know, there's some disaster going around this area? And this could potentially affect the profitability of the tenant, and the tenant then could be in a problem, not being able to pay rent. So these are risks that we have to take into consideration. And the market is clearly taking this into consideration, because we can see that stock price is quite depressed, down about 40% here on a 6-month basis, although it seems to have stabilized a bit here. And we can see, you know, market cap 440 million. And if we took a look at the balance sheet, we can see total assets here of, so this is in thousands, so 8 billion here in assets, with about 5 billion in liabilities. So it's a very discounted company, very cheap right now indeed. And we see this with a lot of property companies, that they are being discounted heavily. We see this in the office sector is getting punished, hospitals are getting punished, everything's getting punished in the property sector, because we don't know what interest rates are going to do. And as you can see, they are quite leveraged. So it's a bet on interest rates. If they go down, well then, of course, it's going to be very good for companies like HPP. But if they go up, then the company might get into a lot of problems. So this one, I'm a bit on the fence regarding. I will keep watch on it. Perhaps I will invest on it. But I don't like this asset concentration on the West Coast. I think that this gives unnecessary risk. It's not only wildfires that are a danger over there. There are some other dangers as well. It's just like, you know, putting all your properties in Florida. A hurricane can happen, stuff can happen, and it's just a risk that I don't want to take in a dividend stock. So for me, I will sit this one out, but I will watch the next quarterly earnings of the company. Just hear some comments regarding the wildfire, just to understand a bit better where management is seeing the business heading. Perhaps there will be a buying opportunity here in the future, but it's not crystal clear yet. Let me know what you guys think about this company in the comment sections below. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.